Hey guys, what's going on? Paul here. Welcome back to another Cardano video. And this one, we're going to dive into scaling and what's possible for Cardano in the short term and the long term. So we have governance now. So it's going to be up to the community to decide what paths we need to follow. So Pi is someone who has come on the channel multiple times at this stage to dive into the more technical side of Cardano. We're going to keep it more high level, but just talking about what's possible. Pi, very welcome back on. And thanks for taking the time.
Yeah, thanks for having me on. I remember, Big Pay was my first interview, and Rick was my second. I think you were my third interview once I came to the Cardano space. So it's been a wild 3 years, and it's always great to be back on your show.
Yeah, you've been on, I don't know, you've been on a good few times now at this point, but give the 30 seconds yourself and then we're going to jump into scaling and the few topics I have in mind.
Sure. So my name is Pi Lanningham. That's Pi like the number. I'm the CTO of Sundae Labs. We built and launched the first AMM DEX on Cardano, and we are a kind of software consulting company that is just in general trying to push the Cardano ecosystem in any way that we can.
That's a good summary. And with Sunday, we're going to do a follow up podcast, maybe in another week or so, looking at V3, which went live a few weeks ago. So it'll be interesting to see how that has went down and things that you've seen since that. But we have governance now on Cardano. There was a lot of talk. Let's go with Hydra because that's a popular topic. Doom on Hydra at Rare Evo. I got to play it. I didn't get to Las Vegas, but got to play it online. Looked really cool. Brought back a lot of memories of playing the game when I was younger. But how did that go? Like, what was the outcome of using Hydra? What did you learn, or what could be possible coming out of that?
Yeah, I mean, so for those who aren't familiar, at Rare Evo, we worked together with a bunch of folks from IOG, with Adam Dean, to kind of put together this, fun and silly tech demo that shows a bunch of the different advantages of Hydra, and especially with the Chang hard fork and the kind of the Cardano treasury and being in the community's hands now and the future of that roadmap, both from a hard fork perspective and a funding perspective, it kind of really is timed well to open up this discussion of scaling. So rather than focus on Hydra, I kind of wanted to talk about the full scaling roadmap and then fit Hydra within context of that, if that kind of makes sense to you.
Yeah.
Cool.
Yeah. So we'll come back to Hydra then, is it, or do you?
Yeah. I think it'll be more interesting to people to fit it within this like broader roadmap, right? Um,
Oh,
so Cardano has, depending on how you count it, a 4 or 5 pillar roadmap for scalability. Um, so fundamentally, if you look at what is possible, there are certain limits if you want all of the properties that Cardano is prioritizing. So that is a decentralized, global, permissionless, robust, and immutable ledger that can settle and decide on the next block, basically advancing that ledger across thousands of people globally, right? Even just from a speed of light perspective, there's a fundamental limit to that. And so if you look and compare across chains, um, Cardano definitely isn't at its limit in terms of those like raw laws of physics perspectives. But if you compare it to other blockchains like Solana, um, I and many others believe that Solana exceeds what that raw limit is, and it does so by giving up on one of these dimensions, right? So, in Solana's case in particular, it uses something called BFT consensus, Byzantine fault tolerant, and that has kind of stronger assumptions it makes about how many honest parties there are. So it assumes that 2/3 of all the validators are honest rather than 51% like Cardano does. And that fundamentally changes the security of the network, but also changes, you know, how long it has to wait in order for things to be settled and things like that. It also makes compromises on the ability for people to run that node and to validate that history kind of holistically. Solana is many terabytes worth of data at this point, and their validators require not unattainable levels of hardware, but it kind of closes out most people. Whereas on Cardano, the requirements to run a fully validating block producing Cardano node, they're not, generally speaking, you can't run a very effective stake pool on a Raspberry Pi, like some people may claim, but in general, they're like commodity hardware. They're achievable for kind of the average person who's serious about doing so. Um, so given those fundamental limits, right, or have we just already lost the race? Have we decided on a set of priorities that that it precludes us from success in the marketplace? Um, Obviously, I'm building on Cardano, so I don't think that that's the case. Very possible that I could be wrong, but um, really, the Cardano's scaling story, the way that it has won me over, is that it creates the most secure and kind of top shelf uh, environment, and then within that environment we can make those different trade-offs that other chains are making for the context that they make sense, rather than starting from kind of making those trade-offs from the start and then trying to capture the the use cases where that kind of auditability, scalability matter. So I think it is much easier to start from where Cardano is starting from, which is having all of these things as a priority, um, and then create escape valves for traffic that can tolerate those trade-offs, rather than going the other way, creating an environment where we've already made those trade-offs for you as a developer, and if you need that extra security, you have to kind of bolt that on top of what the base layer gives you. So what are those different trade-offs, right? One of those is Hydra. Hydra is really focused on the peer-to-peer kind of private transaction domain. So this is, just to throw out a couple examples, if you are trading back and forth like a Venmo with you and a friend, Hydra makes a lot of sense for that. If you are trading back and forth between two businesses, right? So two banks settling ATM fees at the end of the day, right? Where a bunch of banks or have ATM machines and they charge people a fee for taking money out, and then they have to settle and say, hey, well, actually, this many people from your bank withdrew from our machines, you need to transfer that money to us, and settling that either in real time or in typical finance it would be at the end of the day. So this kind of private domain, either peer-to-peer or business-to-business settlement, where you want the security of the layer one if there's ever a dispute, right? If one bank ever says, hey, no, there's no way you let somebody withdraw $2 million from an ATM machine, we're gonna not acknowledge that transaction and do dispute resolution onto the layer one, versus so where the bulk of the traffic doesn't have to exist on the Cardano layer one, but you still have that kind of security for that dispute resolution process. That's really what Hydra is focused on, and it's the one that's furthest along, right? It's the one that the piece of software that has been built for Hydra. I don't know if officially it has the 1.0 marker yet or not, but it is, in my opinion, ready for people to start building production grade workloads on top of. And that's what our demo at Rare Evo was about. Is it showed that we were able to move very quickly in building this demo, and it met the scale. We were submitting one transaction every frame of a game of Doom. That's 35 transactions per second per player. Across 150 Hydra heads, we reached a peak throughput of, I think it was like 7 or 8 thousand transactions per second. Um, and when we look at an individual head, we benchmarked it at 200 transactions per second was kind of the peak throughput. So just really scalable, both in terms of going faster than the layer one within an individual head, but also that horizontal scalability where, as you need more capacity for more players, you can spin up more heads. Now, the downside and the disadvantage of Hydra is that the security model, if you have funds in that Hydra head that aren't owned by the people operating the Hydra head, is very different, right? And so it's not suitable for things like a DEX. Um, the security trade-offs, that's one downside. And then second, I say that you can scale up more and more Hydra heads for more and more capacity. There's very little opportunity right now for cross communication between those heads. Now, the longer term Hydra roadmap does address that, but if you're building on Hydra today, you really have to think about your problem domain of, can I divide this up? Can I put up the room dividers between different users in the system, so that they're they're transacting with the people that matters to them, right? So
Okay.
that's
And
one.
just on
Yeah, go
Hydra
ahead.
at the minute, is it still that you have to say how many people are going to be in it at the start? If you want to add more people, can you do that, or do you have to close the head and reopen it?
So they've implemented incremental decommit, and they're in the process of implementing incremental commit. So if you started building a production system today, by the time that you were ready to launch, incremental commit would be available, but it's not available like today. So yeah, in principle, you can add people as participants to the head.
Okay, and just I'll let you continue on the roadmap. Then after, we're seeing versions of Pumpfun coming to Cardano at the minute. Is something like that suitable? Is Hydra suitable for that, for certain launches that you tell people it's going off at a certain time, they have to get into the head, and then it can all happen rather than putting that chain, that load on the layer one? Or is that still a while away? Or maybe it's not
I
a
mean,
potential use case.
yeah, ultimately that comes down to the comfort that people have with centralization, right? Using Hydra for that is totally possible and totally valid, so long as you are comfortable with, hey, I'm depositing funds into a Hydra head controlled by whoever's operating this platform. And if whoever's operating this platform is comfortable with the added responsibility or risks of having custody of people's money, you could operate a DEX or a centralized exchange really in that way, right? So we could, if the regulatory environment was a lot clearer, that would be a path for SundaeSwap, for example, to launch a centralized exchange version that um, you know people deposit their funds into, and then you operate with the speed of Hydra, and then you can settle out, and it serves more as a lingua franca rather than a means of decentralization, right? So I think there's totally a design where you can do something like a pump.fun um, within a Hydra head, so long as you're transparent with your users and you're comfortable with kind of the legal framework of operating that head, of what that means for you in whatever jurisdiction you're in.
Yeah,
Um,
I think a lot of people getting into tokens like that probably aren't that concerned about decentralization, and probably would take that trade off, because a lot of it is player versus player, really, when getting into launches like that. But could a smart contract own the head? Does that take some of the
Not
responsibility
really,
away? Or
no. Not really. That's
okay.
that's not how Hydra is architected. Now there are interesting designs, like for example auctions, where so some folks from Ikigai and M Labs are working on an auction protocol built with Hydra that's really cool. And the way that works is the funds that you're using to bid and the funds that, or the thing that you're auctioning off, are held in a separate smart contract, and the head operators, it's just a communication protocol. And so the risk of that settlement, and I can go into, we probably don't have time to go into how this works and how it keeps it secure, but so there is an element of creativity where you can look at a problem and decompose it in a really interesting way that gives you the properties that you want. Sorry, but that's on a case by case basis, right? So really, Hydra is at its peak, at its best, when it is peer to peer traffic, right? So some examples of real world use cases where I'm like begging people to go out and build this business would be, a pay for API usage, right? So you, being somebody who operates, like for example, uh, Ada Markets. Does Ada Markets use Block Frost for its?
Uh, we do use it sometimes, but we use Maestro and Koyas. We use most
Yeah,
most
sure.
options out there.
So
Yeah.
so you could, for example, open up Hydra heads with each of these API providers and pay per request with that API provider, right? So Blockfrost, Maestro, Koios,
Okay.
and in that way, you're not relying on their kind of centralized accounting of how much API resources you use, and they're not relying on, hey, is this credit card charge going to settle at the end of the month? You're literally just paying for usage in real time, and if you ever have a dispute, you can close the head just as it is, right? So that would be a fantastic use case for Hydra. Another example is an ad network, right? So the way that ad networks right now work is if you visit a web page, the web page will make a request to something like Google to say, "Hey, show me an ad." Google has a network of ad providers, of kind of clients who have said, "Hey, I want this ad to show to this person," and it will send out a message to each of those kind of ad networks and say, hey, you have 250 milliseconds to bid on this space, and then whoever has the highest bid at the end of that 250 milliseconds I'll show their ad, right? And so
Mhm.
that kind of network of settling the payment for that would be a great use case for Hydra. And there's a bunch of others, and people often ask, why, if Hydra is so great, why aren't people building on it, right? Why would you build a tool that doesn't allow you to like launch a DEX, right? Like, oh, maybe that's a misallocation of resources. And what I've been trying to tell people is that I think this is a survivorship bias, right? So like if a plane comes back from World War II and it's got a bunch of bullet holes on the wings, where do you put the armor, right? Do you put it over where the bullet holes are, or do you put it over the place where there's not bullet holes? And it turns out this was like a really great kind of statistical discovery during World War II or World War One, I can't remember which. But that the planes that come back, where the bullet holes are, that's where they survived, right? They survived taking a shot at that spot. But the planes that didn't come back were the ones that got shot where you didn't find bullet holes because they crashed and you didn't see the bullet holes that took them down. So in the same way, I think that um, the applications that are built and deployed on Cardano right now are the ones that are popular and possible and easy to build on Cardano, on the way that Cardano is architected. And the kinds of things that you'll see built on Hydra, it's not about improving the use cases we already have. It's more about broadening the use cases that we can address, right? And it's kind of just an unfortunate fact of our market that the ones that get people most excited and that create these really hyped token launches that people can raise a bunch of money on and get a bunch of VC funding on are the ones that aren't suited for Hydra. But the vast majority of the world's economic activity actually happens peer to peer, does not need a global public broadcast consensus on settling that transaction, right? And so I think um, the success of Hydra will come from the kind of insightful entrepreneurs, maybe in your audience or maybe out there in the world, who see, hey, I don't want to build what everybody else is building. I'm going to expand into a market that has very little competition, right? And build something cool. So, and if we had the time or the, like, honestly, sales department, there are many of these ideas that I would love to pursue ourselves, but I don't want to go knocking door to door to find people to use this. That's just not where our expertise is. So we're happy to help people achieve that, right? So if anybody listening wants to build on Hydra, absolutely reach out to me. We'll help you get to market much faster. um and so, if people ask why Sundae Labs isn't building any of these ideas that I'm kind of throwing out there, that's basically why, is we want to help people build these, not build them ourselves. And then we're just not salespeople. We're just not people who are going to go and knock door to door.
Mhm. So I suppose that's one pillar, one option for scaling. We have other things. Input endorsers is a name that's thrown around a lot, one that I'm looking forward to seeing. I think it's probably a longer term plan. There's other parameters could be changed, but where would you be looking right now for Cardano scaling in the short term? And then we'll look at the longer term after that.
Yeah, so in the short term, I think it's very much Hydra, and it's very much like, adjustments to our protocol parameters and design patterns on Cardano. So I think that there are ways that we can improve the throughput by adjusting our protocol parameters and optimizing the node. So, for example, the Cardano node is really mostly engineered for its security. And now that we've achieved that and we have a reference implementation, I think it behooves us to ask, okay, now that we know we've done it right, where can we kind of surgically start tightening the bolts on that to make things faster? Or where can we start alternative node implementations like Amaru, which I'm involved in, um, that can use that high assurance node, that Cardano node that is spent so many resources getting it right, to say, okay, well, if our behavior doesn't match this, then we're wrong. But at the same time, take riskier trade offs to try to get more performance out of things. And I think that that's a really rich and interesting space and will allow us to raise the parameters significantly. And I think even right now, there is likely a case to be made for raising those parameters and increasing the capacity of, for example, the memory units available to a transaction. And then also kind of changing the design patterns for the dApps that we're building. So looking at things like executing transactions directly out of the mempool, which I think it was Spectrum and Splash initially pioneered that idea, and now Sundae V3 is doing that. So I think as other dApps approach that, that helps shorten the time between executing, like a user clicking sign in their wallet and getting the funds back in their after it has been executed. But also, even more dramatic and radical changes where more and more of what you're doing doesn't have to happen on chain. So a great example of this is Sundae Labs is building an oracle for butane, and the typical approach, the kind of default that a lot of oracle projects have reached for, is we're going to publish this new oracle reading on chain every, as fast as we can or at some frequency. And I think that is wasteful and vulnerable to, if that transaction has trouble settling, the dApps are going to continue to use the old value, right? Or are going to continue to, or are going to stop operating because the value that they're referencing is too old. So the Oracle network that we've designed for Butane does it entirely off chain. So the Oracle network is a decentralized set of peers that are producing and signing this feed and making it available to anybody using the dApp. And then when you use it, you grab that signed payload and include it in your transaction. And the smart contract checks that it's signed. And so if nobody's using the dApp, you don't have to publish anything on chain. And if the dApp is updating, or the Oracle network is updating its price feed in kind of very fine granularity, that reflects immediately for people who are requesting payloads. And so that, if I can get, I'm not at the risk of the Oracle transaction not settling, but my dApp transaction settling, right? Because they're just bundled into the exact same thing.
That's interesting. And so you would have an expiry time on, basically you sign a normal transaction with whatever the price feed in it, and there's just an expiry time on that. When a new one's created, does that kill the older one, or is there a chance of someone picking up the older transaction instead of the latest one?
Well, so we're not signing the transaction in like a transaction, we're signing a payload, right? So it's not something that you can publish to chain, and this may be too technical, but you include it in the redeemer of the transaction to say, hey, here's the payload, the list of prices that you need, and here's the signature. And then the smart contract checks that signature is valid, and it does have a time window on it. And so that basically that time window is the frequency at which you're producing this, right? And you can kind of design for it to have overlaps depending on your use case and things like that. But yeah.
Okay, that's interesting. I don't want to get taken off our scaling, but when we do the Sundae podcast, I'd like to talk a bit more about that. It's definitely a good approach, I think. But looking at parameters, we can increase things like block size and script size and everything like that. But there is upper limits on what you want to do. Like you referenced Solana earlier on with terabytes of data and that. What are the other options that we have then for Cardano scaling? One I asked, but I suppose that increases the ledger. I was asking on Twitter, and you were talking about it, was the reducing the block time. In my head, non deep dive technical, don't understand the full inner workings of it, is if you can reduce the block time, then you get more blocks per minute, you get faster finality, slightly faster transactions for people depending on how much you reduce it. Right now we have 20-second blocks, but do you just want to touch on that briefly? Some of the
Yeah,
information
sure.
you get me back on that?
And that will actually segue really well into Leios, or input endorsers.
Mhm.
So right now, Cardano has a 20-second block time, which means that on average, right? So blocks are kind of randomly distributed throughout the epoch, but on average, the gap between any two blocks is going to be about 20 seconds. Some might be shorter, some might be as short as 1 second. And some might be longer, right? I think we at one point saw a 2-minute gap in between blocks, but on average it's 20 seconds. And the reason that that value was chosen is because of the security properties of the network rely on basically the network quieting down in between each block, right? So when I produce a new block as a block producer, I start propagating that out through the network, and it's going to kind of reach my peers and then their peers and then their peers. And if somebody else produces a block in that window, they're going to be propagating it out to their peers. And the set of stake pool operators and nodes that get caught in the middle aren't going to know which one is kind of canonical, right? They're not going to know, oh, is this the correct block or is this one? Because that other person, when they built their block, they hadn't heard about mine yet, and so they built it kind of off the same previous block that I did. This is what's known as a height battle, because two different blocks exist at the same height, maybe not at the exact same time. That would be called a slot battle, but at the exact same height, and the network doesn't initially know which one is the correct one, because there is no good answer to that question, right? Um, and so what it does is it has a rule to break ties, but if the other one uh, gets longer, right, then it kind of decides, okay, most of the network seems to be building on top of this fork, and it switches to that fork. And so if you don't have this kind of period where the blocks can propagate across the whole network and kind of quiet down and settle down, then you increase the frequency at which you have height battles, which means now more nodes have to keep 5 or 6 or 8 or 10 different forks in memory, and they're not sure which one. And your uncertainty, right? If you're in your wallet, it's a really bad experience when you roll back and roll forward to a different chain, because that transaction that I just sent funds to somebody may disappear, right? And that's why you wait for like a couple blocks before you like are really sure that a block is settled in the chain. And so the shorter you make that time for things to quiet down, and the more frequently you have these height battles, the worse it is for the health of the network. And at that rate, or at that point, you can start to have some really unhealthy things happen, like an adversary can kind of poison the bias in the randomness, right? They can kind of start getting their blocks or their forks chosen more frequently, and then that could impact how frequently their stake pool gets selected to produce blocks in the next epoch, which they can, like, in theory, compound that over a very long period of time. So if we ran for 2 years with this, it could be that somebody has now biased the entropy and the randomness towards their pool enough that they're suddenly executing 51% attacks, right? So that those parameters, while like any immediate impact of them would be very small, from a security perspective, right? We're not at razor thin margins from a security perspective by any means, but over a very long period of time, we have to really think about the impact of that carefully. And so to achieve that, the kind of research behind Ouroboros says that, and I don't know if these are the exact percentages, these are kind of just the ones that I think that I remember hearing. So don't quote me and whatever, but 95% of blocks should propagate across the whole network in 1 second, like within 1 second, and 99% of blocks should be within 5 seconds. And from what I understand, we are basically, just barely under that margin, where if we lowered the block times from 20 seconds to 15 seconds, that's 3/4 of that margin that we'd be cutting out. And it would it could have some really bad effects for the network. So I don't think that one is an option right now. Maybe if we optimize some of our block propagation protocols, maybe if peer-to-peer proves or it creates a network where blocks are propagating much faster, or things like that, that could be interesting. But I think generally speaking, we're going to see 20-second block times for the foreseeable future. But a big asterisk on that, because that is what Leios is about solving that problem and about making sure that we can propagate blocks much faster and optimizing for this dimension of bandwidth. And so, I know we're kind of limited on time, but just at a high level, what input endorsers, also known as Ouroboros Leios, does is it allows all these different peers to be propagating different blocks filled with different transactions all across the network. So you have very high throughput, but then only committing to and ordering them and saying, okay, these are the ones that are final on a 20-second interval. And so you have the security properties from that, but you're also kind of packing the bandwidth to the brim of, hey, transactions are being produced at a really high volume. Let's propagate those kind of continuously, and not wait for a block before we tell our peers about them, for example. So that's going to be a very big project. That's more in the longer term, 2025, 2026 timeline, though really it's up to whoever ends up building it. That's just kind of my guess, my informed guess as subject matter expert. But that's our long-term scaling roadmap, and that could see, we've got to benchmark it, so I don't want to get people overhyped before we have actually built it, but it could see a many multiple increase in throughput on the network, and that's where we start hitting these kind of laws of physics limits, I think.
Yeah, I suppose and it's something since I think it was John Woods I seen talking about it first, probably 2 years ago, more now at this point, and some of the explanations he done. And since I seen that, I've been looking forward to it coming to Cardano, and it really helps with the throughput. And then there's something else for finality, because you still have every 20 seconds is when you have the block that finalizes transactions. But why am I drawing a blank on? They have a way for finality then as well, don't they?
Yeah, so there's this other protocol, Ouroboros Peras, that is a very clever protocol. It basically says, we're going to do what we're already doing, right? So Ouroboros that publishes blocks every 20 seconds, and we could roll back as much as 2160 blocks. So like, in theory, it is possible for the Cardano network to see a rollback of 36 hours, which would mean that like there is this like big fork in the network where one half of all the stake pool operators have one view of the world and one half have the other view of the world, and then they that connection gets restored, and one of those halves eventually decides, okay, we're going to switch to that other fork, right? And that could be like, just mathematically, it could be up to 2160 blocks, which is about 36 hours. In practice, we never see a rollback that long, right? In practice, the network has enough cross connections that you never see it divided by that for that long. And so, I think the longest rollback we've seen on mainnet might be like 14 minutes. So like maybe like 15 to 20 blocks at most. And so what the Peras protocol does is it says, okay, a stake pool operator, in addition to propagating these blocks, is also going to vote on how likely it thinks this this block is to be kind of the real block that we stick with forever. And they vote with their stake weight. So they say, hey, I have 2 million ADA of delegators. I'm voting with 2 million ADA that this block kind of is heavier. And then all of the nodes running Peras basically factor that into their their chain tip selection. And so if a block has lots of votes that it's going to be final, then other stake pool operators will say, okay, well, if they're voting for it, it's much more likely that it will be that in that final chain. And so I'm not going to switch to another chain unless things are really bad, unless it makes it much harder for the network to switch away from that chain, which means that you can increase your confidence in a block much, much, much faster. So instead of like having to wait for 8 blocks for things to be quote unquote final, you can be really confident, 99.999% confident that within like 2 or 3 seconds after a block being produced, it's not going to get rolled back, because all of these stake pool operators have said, unless things are really bad, I'm not switching away from this block, even if there's a longer chain that's just like a few blocks longer. And so that really lets the network kind of congeal or converge on that block really quickly. And so that gets you your kind of instant finality where, instead of, because like if you pull up C Explorer or Cardano Scan, it says like 8 out of 8 or 7 out of 8. So you have to like wait for a couple minutes. And, if you're somebody buying a stick of gum at a grocery store, they're not going to let you leave the grocery store until that settles, right? Because they don't want the risk that it's going to roll back. And so Paris gets you down to like within 1 or 2 seconds of the block being minted in the first place. We have really high confidence, and so you can walk out of the store with your stick of gum or whatever it is.
Yeah, Algorand have done some very good marketing videos on the instant finality and how things work comparing different chains. But there's a lot of research in both of them and different options for Cardano. I'm conscious of time now and your time as well, but where would you be looking to concentrate on? Or it will be up to the community to vote on who gets funded to build certain aspects. So where would you be looking right now?
Yeah, I mean, I wouldn't necessarily ask the question in that way, right? I think that all of these are important to our scaling roadmap.
Mm-hmm.
And I think that Cardano is no longer at the point where any one company can deliver on even a single one of those. And so I think the best path forward is to see a diverse set of companies working on these improvements. Now, Sundae Labs is a software consulting company, so obviously I'd love to be involved in that effort. But even if Sundae isn't involved, right? Even if the community were to vote on other companies getting that funding, M Labs, Well Typed, Anastasia Labs, TX Pipe, like all of these companies are really great. Even if they landed them, I don't think any one of them can deliver effectively. And so I think the best arrangement would be something like IOG in a shepherding position, in a leadership position to say, hey, we're organizing the work and we're making sure that it's not a bunch of voices talking over each other. It's not a Tower of Babel situation where everybody is pulling in different directions, where somebody like IO, who has 7 years of experience and context building on Cardano, can direct that work, but where it solicits the input and developer experience and real world battle scars from a kind of wide base of companies to say, okay, Sundae Labs is going to work on this component because that matches their expertise, and TX Pipe is going to work on this component because that matches their expertise, and things like that. So I think that arrangement would be really, really interesting in whatever form it took. So that's where, and I tweeted this out a couple days ago, but that's kind of what I see as the ideal arrangement for the Cardano ecosystem, if it wants to kind of continue to push the boundaries of its scale.
Okay. And will you be putting in any proposals? I know we talked about some of the parameters that could be changed. Would you see yourself putting in proposals on some of them, or looking for someone else to do it? Or
Yeah, so there is the kind of off-chain process, which I've already started for updating the memory units. I started that a couple months ago, and it progresses very slowly, which I guess is understandable for these things because you've got a lot of stakeholders. But I think that is progressing, and I do think the last kind of protocol committee meeting, they did say they plan to move forward with upping the memory units. And so that will likely be somebody putting in that proposal. I think if I pull, I think I'm close to 100,000 ADA, so I could probably, take out a loan and get there, but for the deposit. But anybody else is kind of, I don't think it matters who submits the proposal.
Mhm.
And yeah, so um, that we are probably, so we're still kind of deciding what proposals we put in for Catalyst. We will probably be asking for funding to work on Amaru, which is not necessarily on like the longer term scaling roadmap, but this is in that vein of like lowering the resource requirements and optimizing an alternative implementation of the node to help us buy more um, uh, ceiling room so that we can raise those parameters even more. Um, so that will likely be one of the ways that we look to contribute there. But the verdict's out on any other ways that we might contribute.
Okay, and just on that, just before we finish up, will that be the Node client done in a different language? I've heard of people looking at doing it in Rust and a few others, or would that be optimizing what's there?
Yeah, so TX Pipe with collaboration from a bunch of different companies are already building that. That's Amaru, which is a Rust implementation of the node, and so that's one of the ways that we plan to contribute. That's under the Pragma umbrella. So there's 5 different companies that came together to basically say, hey, we want to build really high quality open source software to advance the Cardano ecosystem. And so Sundae Labs was one of the founding members there, and that's the vehicle that right now we plan to use to advance that. Whether there are other vehicles that we help push forward in the future, I'm open to it, but that's right now what we're focused on.
Okay, and my final question then, I'll hand it over to you for closing thoughts, is on the multiple clients. I know Charles made comments on it before that this can slow things down to a degree, having multiple clients before you have the, I suppose, Cardano where you really want to have it. How do you see having multiple clients? Even if you optimize the client version that you're doing, are you still not dependent on the limits of the current Cardano node?
Yeah, I mean, absolutely. Especially while we expect for many years the vast majority of Cardano nodes will still be running the Haskell node.
Mhm.
Um, the Where I would push back is that um, having multiple node implementations and that kind of coordination among different parties definitely has the opportunity to slow things down in some ways, right? You have to reach consensus among a larger group of people about how to push the protocol forward. I think on the other hand, it has the opportunity to accelerate development in a lot of interesting ways. The Cardano node, as kind of high assurance and high quality software as it is, has 6 years worth of entrenched technical debt, right? Of a
Mhm.
specific way that it's doing things, and making changes to a large code base when it is uh, when it is so security critical is very challenging. And so having Amaru, which is written in Rust and doesn't have to worry about hard forking the network for the foreseeable future, right? Until we achieve, I imagine for the next year or two, there will be less than 1% of stake pool operators running it. So if we have a bug, okay, it's no big deal. So we have that freedom to iterate faster and take riskier stances in what we build, still with an emphasis on long-term correctness. Of course, we're going to be comparing it to the Haskell node, but we can innovate in that way and then feed those learnings into the Haskell node. So we can say, hey, this worked really well for us. Turns out saving things to disk instead of holding it all in memory doesn't have as big of an impact as you thought it might. And so let's take that learning and integrate it into the Haskell node. Or hey, we did this experiment where we saved everything to disk instead of holding it all in memory, and it absolutely tanked performance. You don't have to bother going down that route in the Haskell node. You can focus your efforts on other things. So I think that while coordinating among multiple parties has a chance to create a drag on things in some respects, it also creates opportunities to accelerate the development and have that broader set of perspectives. You're not reliant on, the 12 PhD Haskell developers in the world. Rust has a lot more developers than Haskell developers. So, I think it remains to be seen how that will balance out. But I wouldn't kind of just write it off as like, oh, we're slowing Cardano down even more by going this route.
Sorry, we just got cut there. So for you, for your closing thoughts on this, what would you leave us with on Cardano scaling? What should people keep in mind for potential votes coming up, or what the community should be considering now?
Yeah, I mean, I think the most important thing that I want people to take away is that Cardano makes a bold and risky hypothesis that at the end of the day, the market and the usage of a blockchain will be determined by its underlying security and decentralization properties, not by its kind of flashy metrics. Right? That's kind of the central hypothesis of Cardano. We're all in this ecosystem because we're bought in on that hypothesis, but it very well could turn out to be that that is an incorrect hypothesis, right? In that at the end of the day, the average end user is not taking into account the nuance, and they just want number go up. They just want big transaction volume, even if that puts the control of those transactions under under the control and the at risk of censorship from a much smaller set of people. That being said, the scaling roadmap is varied, and it is not a case of figuring out what we need to do. It is a case of pushing and actually doing it. It is a lot of engineering work, but it is not any surprising or innovative or kind of heavy discovery based work where we are not in a situation where we are saying, man, how are we going to achieve this next level of scalability without giving up on what we got. We know how to get there. We know, and we didn't even get to touch on, 3 of them. We really just focused on 2 of them. But how do we know what those components look like? We just have to put in the legwork to build them, and it's a lot, but it is not anything that is going to be surprising.
Yeah, I think that's a good summary. Like you said, there's so much more we could have got into today, maybe as well as the Sunday podcast. We might need a part 2 on this one. But everyone watching, do ask questions down below if you have any, if you have topics that you would like us to dive a bit deeper into. If I can get Pi back on again, what are the topics that you would like to see us discuss? Because these here are just about education, trying to put the word out there and let people have a look at this and maybe get ideas what they can build as well, or ways that they can take things that we discuss here. Like we talked a good bit about Hydra at the beginning. Hopefully it might have tweaked some potential ideas for people. Paya said you can reach out to Sundae Labs to discuss how to get things to market if you want. Details for Pi and Sundae and everything will be down below. Pi, once again, thanks very much for your time. I do appreciate it as always. Everyone watching, share it out. Really do appreciate it. Give it a like, subscribe if you're new, and I will talk to you soon. Thanks for watching.
Thanks for having me on the channel.